All right, everyone get ready, because today we are going deep into the world of cryptocurrency.
Exciting.
It's been all over the news lately.
Oh, yeah?
Not just for the, typical market craziness,
Right.
but for a possible strategy that could like totally reshape the US economy.
Huge implications.
Yeah, so we've got some new stuff on a recent crypto market dip
Okay.
and a super interesting report on Michael Saylor's presentation at the White House Digital Assets Summit.
I'm familiar with his work.
Yeah, Saylor, right?
Yeah.
The MicroStrategy co-founder.
Yeah, fascinating guy.
Yeah, he's got some bold ideas, that's for sure.
For sure.
So crypto's down,
Yeah.
as always seems to happen.
That's volatile.
But is this dip just a blip, or is it something more serious?
Right.
And then how does all this connect to Saylor's idea of a $100 trillion opportunity?
Yeah, that's a big number.
Yeah, I'm really excited to unpack all of this with you.
Me too.
Okay, so let's start with this recent market dip.
Right.
The kind that makes even like the most experienced investors sweat a little.
Yeah, for sure.
Overall, the market is down 0.44%,
Okay.
which, might not sound like a lot
Right.
But
when you're talking about
when you consider that the total market cap is around $2.81 trillion.
trillion with a T.
Even a tiny drop means a lot of money disappearing.
A lot of money.
Yeah, exactly. And it gets even more interesting when you look at specific coins.
Oh, yeah.
Bitcoin, the big one, is down almost 5%.
Wow.
Ethereum even worse, down over 8%.
Ouch.
And Dogecoin. Well, let's just say it's been a rough week for Dogecoin,
Rough week.
with a drop of almost 13%.
Oh, man.
So is this just normal crypto being crypto, or is something bigger going on?
But the truth is, it's almost never just one thing.
Right.
Like right now, we've got the U.S.-China trade war causing all this uncertainty globally.
Right.
And then the Federal Reserve is kind of like tiptoeing around these interest rate hikes.
Yeah.
Which is making investors a little nervous.
A little jittery.
Yeah. And don't forget President Trump's recent executive order for a strategic Bitcoin reserve. Oh, yeah.
That definitely made some waves.
It did.
But even that hasn't been enough to totally, calm everyone down about the overall economic situation.
Yeah, it's like this massive financial ecosystem, right?
Yeah.
Everything is connected.
Exactly. And that's kind of what makes Saylor's strategy so interesting.
Okay.
He's not just looking at crypto by itself.
Right.
He's trying to figure out how it fits into the whole U.S. economy and its future.
I like that.
Yeah. So that brings us to the White House Digital Assets Summit.
Okay.
I have to admit, when I first heard about a strategic Bitcoin reserve,
Yeah.
I thought, is this guy serious?
Right.
But the more I read about Saylor's presentation, the more I realize this isn't just some crazy idea.
Yeah, no, he's a smart guy.
He's got people listening.
Absolutely. And the fact that the summit had all the major players there,
Yeah.
Coinbase, Ripple, Kraken, Gemini, even Robinhood,
Big names.
it shows you that the government is really paying attention to this stuff.
That's fascinating. So can you break down Saylor's proposal for us?
Sure.
What is this four-class taxonomy of digital assets all about?
Okay, so Saylor is saying that in order to properly bring crypto into the normal financial world,
Right.
we all need to be on the same page about what these assets are and how they work.
Makes sense.
So he breaks them down into 4 categories.
Okay.
You've got digital tokens, which are basically tools for raising capital and driving innovation.
Okay.
Digital securities, those are focused on improving market efficiency.
Got it.
Digital currencies, he sees those as a way to strengthen the US dollar and make transactions smoother.
Interesting.
And finally, digital commodities, with Bitcoin as the main example, those are for long-term wealth preservation.
So it's like he's trying to create a map,
Yeah,
a way to navigate this confusing world of digital assets.
exactly. And this whole classification system is super important to his overall plan,
Okay.
especially when it comes to the strategic Bitcoin reserve.
Ah, yes, the big idea.
The big one,
He's proposing that the U.S. buy up a big chunk of the total Bitcoin supply,
right?
somewhere between 5% and 25% by 2035.
Ambitious.
Yeah. And he wants to do this through what he calls programmatic purchases.
Interesting term.
Can you explain what that means?
Yeah, so basically it means buying Bitcoin gradually over time
Okay.
instead of making one massive purchase all at once.
Got it.
This way, they can minimize any disruption to the market.
Right.
And the U.S. can strategically build up its Bitcoin holdings as its value hopefully goes up.
Interesting strategy.
Yeah.
Okay, I'm starting to see how this all fits together.
Yeah.
But let's be real. The most shocking thing here is how much money he thinks this could make.
It's a big number.
Saylor's projecting that this reserve could generate between $16 and $81 trillion by 2045.
Yeah, it's mind-blowing.
I mean, that's a crazy amount of money.
It is.
It's like erasing the national debt
Yeah.
and then having a huge party with what's left over.
Right.
But is that number even realistic?
That's the big question.
Yeah. Like, what are the assumptions he's making to get to that number?
So his argument is based on the idea that it will keep going up significantly.
Okay.
He believes that as more institutions and regular people start using Bitcoin, and as the regulations become clearer,
Right.
that the limited supply of Bitcoin will make the price skyrocket.
Okay, so it's all about supply and demand.
Exactly.
But isn't that a bit of a gamble?
Well, yeah,
What if the price of Bitcoin crashes?
it's definitely a risk,
I mean, we've seen how volatile it can be.
for sure.
What happens to Saylor's plan then?
Well, that's where the critics come in.
Okay.
They say that Bitcoin is just too unpredictable and easily manipulated to be a reliable store of value,
Right.
let alone a way to fix the national debt.
Yeah.
They point to its history of wild price swings and the lack of any real underlying assets
Right.
as proof that it's more of a speculative bubble than a safe investment.
So it sounds like a classic high-risk, high-reward situation.
Yeah, you could say that.
If Saylor's right, this could be revolutionary.
Huge,
But if he's wrong, well, let's just say it could get messy.
to say the least.
All right, so we've talked about the good and the bad.
The ups and downs.
But what about the actual details?
Yeah, the nitty-gritty.
How would the U.S. actually buy 5 to 25% of all the Bitcoin out there?
So that's where those programmatic purchases come in.
Okay, remind me what that means again.
So it basically means setting up a system where the government automatically buys Bitcoin
Okay.
at regular intervals.
So they'd be spreading out the purchases over time.
Exactly, to minimize the impact on the market.
Smart.
Yeah.
But wouldn't that still cost a ton of money up front?
Well, yeah, it would be a significant investment.
Where would they even get the money for that?
Well, Saylor suggests using a combination of existing government funds,
Okay.
maybe reallocating some spending from other areas,
Right.
and potentially even issuing bonds specifically to buy Bitcoin.
I can see that being a tough sell politically.
For sure, it would be a big decision.
Yeah.
And it would require a major shift in how people think about government finances.
For sure. So let's imagine for a second that the U.S. does manage to jump through all the political hoops,
Okay.
and they actually set up this Bitcoin reserve.
All right.
What happens next?
Well, the idea is that as the value of Bitcoin goes up,
Right.
the value of the reserve goes up too.
Right.
And that could generate a lot of profit for the government.
Okay.
And they could use that profit to start paying down the debt.
So it's like using Bitcoin profits to offset the national debt.
Exactly.
But isn't that kind of just delaying the problem?
Well,
Aren't we just replacing one type of debt with another?
that's a valid point.
Yeah, like debt to whoever sold the government all that Bitcoin.
You're right. It's not a perfect solution.
Right.
And it highlights the fact that even if Saylor's plan works perfectly, it's not going to fix the national debt overnight.
Yeah.
It would be a long-term strategy.
A long game.
Yeah, and it relies on the very big assumption that Bitcoin will keep going up in value.
Right. Which is not guaranteed.
Not at all.
So it's not a magic bullet.
Definitely not. And it's important to remember that even if the U.S. pulls this off,
Yeah.
it doesn't actually address the root causes of the national debt in the first place.
Like overspending and inefficient tax policies.
Exactly.
And a lack of fiscal discipline.
All those fundamental problems would still need to be solved.
It's not going to magically fix everything.
Right. A Bitcoin reserve, even a super successful one, wouldn't magically fix all that.
Okay, I'm getting a clearer picture now.
Good.
It's obvious that Saylor's idea has got everyone talking.
It sparked a debate.
And it's raising some really important questions about how crypto fits into the global economy.
For sure.
But before we go too far down the rabbit hole of what ifs,
Okay.
I think we need to bring this back to reality.
Right.
What's the situation with crypto regulation in the U.S. right now?
Okay.
Is the government even ready to handle something like this?
That's another big question.
Yeah.
The truth is, the whole regulatory landscape is still very uncertain.
Really?
Yeah, we've got President Trump's executive order,
Right.
which, calls for setting up a Bitcoin reserve and lays out some basic rules for the crypto industry.
Okay.
But a lot of the details are still being figured out.
So it's like having the blueprint for a house, but no idea what materials to use or who's going to build it.
That's a good analogy.
Yeah.
And then there's the whole issue of enforcement.
Right.
The U.S. government hasn't always been great at keeping up with new technology.
Right.
So some people are worried about whether they have the resources and the knowledge to actually regulate something as complex and decentralized as cryptocurrency.
Yeah, especially with how fast things move in the crypto world.
It's like lightning speed.
One day it's Dogecoin to the moon, and the next day it's some new meme coin that nobody's ever heard of.
Yeah, it's constantly changing.
It's hard to keep up.
And regulators are definitely playing catch up.
Okay, so we've covered a lot of ground here.
A lot of ground.
We've talked about the possible benefits of Saylor's proposal, the big risks involved,
Yeah.
and the practical challenges of actually putting it into practice and regulating it.
Right.
But what about the bigger picture?
Okay.
What are the potential implications of all this for the global economy,
Right.
for the U.S. dollar,
Yeah.
and for the future of finance in general?
That's where things get really interesting.
Okay, well, let's take a quick break,
Sounds good.
and then we'll come back and explore those big questions in more detail.
I'm ready when you are.
Stay with us.
All right.
So we're back and ready to really get into what a U.S. economy powered by Bitcoin could look like, based on Saylor's vision.
Right. A lot to unpack there.
For sure. And I think before the break, we were talking about those huge projections.
Yeah, the big numbers.
$16 to $81 trillion by 2045.
It's a lot to wrap your head around.
It really is. It makes you kind of dizzy.
Yeah, for sure.
But as we were saying, it's super important to understand what he's basing those numbers on.
Absolutely. Got to look at the assumptions behind it all.
Right. And one of the biggest ones is that Bitcoin's value will just keep going up
Yeah, that's a key part of it.
at a pretty fast rate.
Yeah, a significant growth is kind of built into the model.
So Saylor's argument is that Bitcoin's limited supply,
Right, the scarcity.
combined with, more and more people wanting it,
Demand going up.
will push the price higher and higher.
Exactly. Classic supply and demand.
He compares it to digital gold a lot,
I've heard that.
saying that as more people and institutions start to see it as a safe place to store their wealth,
A store of value.
yeah, it'll become even more desirable.
Makes sense on the surface.
But isn't that kind of like saying if everyone jumps off a bridge,
Okay.
the bridge will suddenly become more valuable because fewer people can jump off it?
I see where you're going with this.
Yeah, it doesn't seem like a very solid economic principle.
That's a good analogy, and it does highlight one of the main criticisms of Bitcoin,
Which is?
that its value is mostly driven by speculation and hype.
Oh, interesting. Rather than any real use or, something tangible backing it up, critics say it's basically a bubble that's going to burst.
Oh.
And that counting on it to keep going up in value to solve the national debt is a huge risk.
A gamble.
Yeah, a big one.
So what would Saylor say to those critics?
Well, he would point to a few things.
Okay.
One is the growing number of big institutional investors who are putting money into Bitcoin.
Really?
Yeah, like companies like MicroStrategy.
Of course. His own company.
Right, but also Tesla, Square, they're adding Bitcoin to their balance sheets.
Wow. So it's not just, tech enthusiasts and people on Reddit anymore.
Not at all. It's becoming more mainstream.
That's interesting.
Yeah, and then there's the regulatory side of things,
Right.
which is starting to become more clear in some countries.
So like actual laws and rules around crypto.
Exactly. And as governments figure out how to regulate it properly,
Mm-hmm.
it could lead to even more people using it.
Right.
And it could make Bitcoin seem more legitimate as an asset class. So less like the Wild West.
Yeah, more like a, established part of the financial system.
That makes sense if people feel like their investments are protected.
Yeah, they're going to be more likely to invest.
But even if Bitcoin does keep going up in value,
Okay.
isn't there a risk that if the U.S. government buys so much of it,
Yeah,
it could mess up the market?
that's another valid concern.
Like too much influence.
Yeah, critics are worried that a government-controlled Bitcoin reserve could give the U.S. too much power over the cryptocurrency market.
Oh, interesting.
They say the U.S. could manipulate prices or even use it as a tool in foreign policy.
Kind of like those conspiracy theories about the U.S. controlling the global oil market.
It does have some
It's
similarity.
a little unsettling.
Yeah, and it raises questions about how much government should be involved in a system that's supposed to be decentralized.
A lot to think about there.
For sure.
Okay, so we've talked about the possible benefits and the risks.
Upsides and downsides.
But what about the logistics of it all?
Yeah, like the how to...
How would the U.S. actually go about buying 5 to 25% of all the Bitcoin out there?
Right, so that's where the programmatic purchases come.
I think I'm starting to get that.
So basically a system where the government automatically buys Bitcoin
Okay,
at regular intervals.
schedule.
Yeah, spread out over time to sudden moves in the market.
Smart. They'd just call up Coinbase and say, hey, we'll take 100,000
No, not at all. It would be much more strategic.
more automated.
Exactly. Probably using algorithms to figure out the best times to buy.
Okay, interesting.
Yeah.
But even with that approach,
Mm-hmm.
it would still take a lot of money to get started, right?
Oh, yeah. It would be a huge initial investment.
So where would the funding for this reserve come from?
Well, Saylor suggests a few options.
Okay.
One is to use existing government funds.
Okay.
Maybe take some money that's currently being spent on other things.
Right. Reallocate it.
Exactly. And another option is to issue bonds specifically for buying Bitcoin. That sounds like it could be controversial.
It would definitely be a big political decision.
Yeah, government spends internet money. It wouldn't be an easy sell.
For sure.
And it would require people to really rethink how governments manage their money.
Definitely a big shift.
Yeah, a major one.
Okay, so let's say the U.S. manages to overcome all the political obstacles,
Okay.
and they actually establish this Bitcoin reserve.
All right.
What happens then?
Well, the idea is that as Bitcoin's value increases,
Right.
the value of the reserve increases too.
Okay.
And that could make a lot of profit for the government,
Okay, I follow you.
which they could then use to pay down the debt.
So using Bitcoin profits to chip away at the national debt.
Exactly.
But isn't that kind of just kicking the can down the road? I mean,
Right.
aren't we just replacing one type of debt with another?
You're right. It's not a simple solution.
Like, we'd still owe money to whoever sold the government those Bitcoins.
Yeah, that's a valid point.
So it's not a magic solution to the debt problem.
Definitely not. And it's really important to remember that even if everything goes perfectly with Saylor's plan,
Yeah.
it doesn't actually solve the underlying problems that caused the national debt in the first place.
Like overspending and bad tax policies.
Exactly. And a lack of fiscal discipline in general.
Right. All those fundamental problems would still be there.
A Bitcoin reserve, even a super successful one, wouldn't magically fix all that.
So it's not a cure-all.
Definitely not.
Okay, I think I'm starting to understand the complexities here.
Yeah, it's a lot to consider.
It's clear that Saylor's proposal has really sparked a debate.
Oh, yeah.
It's got everyone thinking about the role of cryptocurrency in the world.
Big questions.
Yeah. But before we get too caught up in the hypotheticals,
Right.
let's bring it back down to earth for a minute.
Okay.
What's the current state of crypto regulation in the U.S.?
Right.
Is the government even equipped to handle something like this?
That's another big question. To be honest, the whole regulatory landscape is still very much in flux.
Really?
Yeah, I mean, we have President Trump's executive order,
Right.
which calls for creating a Bitcoin reserve and sets out some basic guidelines for the crypto industry.
Okay.
But a lot of the specifics are still being worked out.
So it's kind of like having a blueprint for a house, but no idea what materials to use or who's going to build it.
Yeah, that's a good way to put it.
It's a start, but there's a lot missing.
Exactly.
And then there's the whole issue of enforcement.
Oh, right.
Like, can they actually make people follow the rules?
Yeah, that's the key.
Historically, the U.S. government hasn't been great at keeping up with technology.
Right.
So some people are worried about whether they even have the resources and the expertise
Yeah.
to properly regulate something as complex and decentralized as cryptocurrency,
It's a valid concern.
especially considering how quickly things change in the crypto world.
It's like lightning speed.
Yeah, one day it's Dogecoin to the moon, and the next day it's some new meme coin that no one's ever heard of.
It's constantly evolving.
So hard to keep up.
Regulators are definitely playing catch up.
Okay, so we've covered a lot of ground here.
We have.
We've talked about the possible upsides of Saylor's proposal, the major risks involved,
Right.
and the practical challenges of actually making it happen and regulating it.
The nitty gritty.
Yeah, but what about the bigger picture?
Okay.
Like, what are the implications of all this for a global economy, for the U.S. dollar,
Yay.
and for the future of finance in general?
That's where things get really interesting.
Okay, well, let's pick up there after a quick message.
Sounds good.
Don't go anywhere.
And we are back, ready to finish our deep dive into cryptocurrency and this whole idea of a U.S. economy powered by Bitcoin, like Michael Saylor is proposing.
A bold vision for sure.
It is, with, like you said, tons of potential, but also some serious risks.
Right, and it brings up some really fundamental questions about, like, the future of money itself.
Yeah, you mentioned a paradigm shift before the break.
Oh, yeah.
What did you mean by that? So for centuries, the global financial system has been based on fiat currencies, right?
Backed by governments and central banks.
Yeah. Exactly. But Bitcoin and other cryptocurrencies, they represent a completely different approach.
Totally different.
A decentralized system that relies on cryptography and consensus mechanisms.
So instead of governments controlling the money supply and setting interest rates,
Right.
it's all determined by algorithms and the power of the network.
Exactly. And that has the potential to, like, really shake things up.
Disrupt things.
Yeah, disrupt traditional power structures and create new opportunities for people and businesses to participate in the global economy.
That's a big deal.
It is.
But isn't that also kind of scary?
In some ways, yeah.
Like, what if something goes wrong?
Right.
Who do you call if your Bitcoin wallet gets hacked?
Right, or if the whole system crashes.
Yeah, exactly.
That's one of the biggest challenges for crypto,
I can see that.
Building trust and stability in a system that's not controlled by anyone.
Right. No central authority.
And that's why regulation is so important.
To protect people.
Yeah, not to, like, kill innovation.
Right.
But to create some guardrails, make sure investors are protected, and that the whole thing grows responsibly.
So finding that sweet spot between encouraging innovation and protecting consumers.
Absolutely, and that's a challenge for governments all over the world.
It is a global thing.
Yeah, because unlike traditional banks and stuff, cryptocurrencies don't care about national borders.
Right. They just flow.
Yeah, so any attempt to regulate them has to be international.
Got to get everyone on board.
Exactly. Global cooperation is key.
Which is, not always easy.
Not in today's world, no.
Okay, so let's focus back on the U.S.
Okay.
What would an economy that actually runs on Bitcoin look like?
Well, if Saylor's vision plays out the way he thinks it will,
Yeah.
we could see the U.S. dollar becoming less important in global trade and finance.
So less dominance for the dollar.
Right. Bitcoin could become a real alternative reserve currency,
Wow.
potentially challenging the dollar's position.
And what would that mean for the average person?
Hard to say for sure, but some people argue it could lead to more financial freedom and opportunity
Okay.
because everyone would have access to this global decentralized system.
Right, no gatekeepers.
Exactly. But
Okay.
others are worried about the potential for, like, instability and volatility.
Right, because it's still so new.
Yeah, especially if Bitcoin doesn't actually turn out to be a reliable store of value like everyone's hoping.
So a lot of unknowns.
A lot of uncertainty, yeah.
And it's important to remember that this is just one possible future.
Right.
There are a lot of ways this could go.
The story of crypto and its impact on the global economy is still being written.
Okay, so let's say, for argument's sake, that Saylor's plan doesn't work out.
Okay.
What are some other possibilities for the future of crypto?
Well, one possibility is that we see a more gradual integration of crypto into the existing financial system.
It's like a slower, more measured approach.
Yeah, more evolution than revolution.
Okay.
Financial institution and crypto service
Would adapt.
might see these hybrid systems that combine the best of both worlds.
The stability of traditional finance of blockchain.
Exactly. Yeah, a more balanced approach.
And what else?
Another possibility is that governments and central banks around the world start launching their own digital currencies.
Oh yeah, the CBDCs.
Exactly, central bank digital currencies.
We've seen China doing.
Right, and lots of other countries are looking into it.
So it's a trend.
It is, and CBDCs could offer some of the benefits of cryptocurrencies, like faster and cheaper transactions,
Okay.
but they would still be controlled by central authorities.
So it's like a digital version now,
In a way, yeah.
but it also gives governments more control
Potentially, yeah.
and maybe even the ability to track individual transactions.
That's a concern for some people.
It sounds a little Big Brother-ish.
It does raise some questions about privacy and financial freedom, for sure.
Okay, so we've got a lot of potential scenarios here.
Yeah, it's a wide range of
You
possibilities.
have Bitcoin-powered U.S. economy,
Right.
crypto slowly becoming part of traditional finance,
Uh-huh.
the rise of CBDCs.
It's a lot to keep track of.
It's a lot to think about, that's for sure.
It is, but that's also what makes it so exciting.
Yeah. The future of money is literally being decided right now.
It really is, and I think that highlights the need for us to keep talking about this.
Keep learning.
Yeah, keep exploring these ideas, weigh the pros and cons, and figure out how to navigate this new world responsibly.
It's a team effort.
It is. The future of finance is being shaped right now, and it's up to all of us to participate in that conversation.
To help shape the outcome.
Exactly.
Well, I think we've given our listeners a lot to chew on today.
A lot to digest.
This is definitely a topic that deserves careful consideration.
Absolutely. It's worth exploring further.
So with that, we'll wrap up our deep dive into cryptocurrency and this idea of a U.S. economy powered by Bitcoin.
It's been a great discussion.
I agree, and I think we've covered a lot of ground.
We have.
Hopefully our listeners found it informative and thought-provoking.
I hope so.
We encourage you to keep learning about this fascinating topic and share your thoughts with us on social media using #TheDeepDive.
We love hearing from you.
Until next time, keep learning, keep questioning, and keep diving deep.
See you next time.